look at this from a housing and a overall macro perspective, does weather have a real impact on consumption? You spoke a little bit about the hurricanes and the impact on the housing market, but for overall consumption, going into this winter, given that it's supposed to be unseasonably snowy and cold in certain regions, does that get modeled in at all? Does that have any noticeable, tangible impact to the U.S. level numbers?
Yes and no, like most things, I guess. The answer is yes, but any weather-related distortions, obviously if you have something like it's 80 degrees through the whole summer and people never buy winter clothes, that's demand that's deferred, that's not coming back. But largely these weather effects manifest as time shifts in consumption. So say you have, and you see it show up in the housing numbers to use that specifically, if you have these La Nina effects and it's polar vortexes every 2 weeks, beginning in February and rolling through March, you see that show up in something like housing starts numbers. The grounds can, if you go out and try to shovel, and I've tried to dig a foundation in sub-zero temperatures, it's not what you want to be doing. But it curtails activity, right? So it's something that would have been, if you had plans to break ground and start construction in February, it's negative 10 degrees, polar vortex, that basically gets time shifted out, right? So these numbers show up and they kind of, people try to parse them and tactically manage, the difference between expectations in real time, but in large part, it mostly represents deferred consumption and mostly just gets time shifted in terms of its impact.